How are you looking at the China story at this juncture, given the fact that all the data that we've received thus far is just pointing towards a patchy, uneven recovery still?
Yeah, I got to say, when I speak to investors, I think no one doubts that the overall economic recovery is quite patchy. It's not a strong recovery year to date. But I think what investors have noticed is from a ground-up perspective, particularly from listed companies, the tech companies in particular, where we are seeing earnings holding up despite a weak macro backdrop. We are seeing dividends being extended at a very elevated level, buyback at a historical level as well. So that's the first thing. And number two is, I think when we speak to investors, generally people are less concerned about the systemic risks posed by the property market, because we have seen many defaulted already, and it seems like the financial system is holding up. And we have seen recently more supportive policies for the Hong Kong market in terms of withholding tax, and also the property policies starting to turn around as well. So it does seem that from a ground-up perspective, things are looking a bit better compared to the overall economy.
Right, but on the strength of the Chinese consumer, it's not like we aren't hearing that consumer vouchers are being distributed, especially by local governments. And also rural consumption, I'm given to understand, has picked up far more than urban consumption. So on balance, how do you see the trend there?
Yeah, I'd say for consumption, it's a very divergent trend. And I think you have to factor in the fact that we are seeing a huge downturn in the property market. And so where property prices last year on the secondary market is down 20%. So-called the wealth effect, in our view, is probably not as strong in China compared to other markets. I mean, for mortgages, you can't remortgage your home in China as property values go up. So the property value or wealth effect is not as strong compared to other markets. And we are seeing a divergent trend in the sense that people are still going out. To outbound travel has been very resilient. You look at Macau, so Macau, you look at some of the discretionary parts like auto for the last 12, 18 months has been quite resilient, whereas it's actually the staples have underperformed. So we're looking at beverages, we're looking at instant noodles, pickles, etc., milk. They're the ones that's been suffering. So I'd say it's not a total collapse of the consumer. Consumers are trading down in some respect, but some of the high-end stuff, people are still buying those. So it's a very divergent consumer trend.